Shares of Palantir are some of the most popular on the market today, and everybody has an opinion about what the future of Palantir looks like. So today I want to look at, is the stock underrated or overrated? And let's start with the company's growth. You can see from this chart that Palantir has been a phenomenal growth company, and the growth is picking up, growing 39% over the past 12 months. Since mid-2021, that compound annual growth rate is 26.8%. But what investors really like about this growth rate is the acceleration in growth. When a company is accelerating their growth rate, that typically means that they deserve a higher valuation multiple, because if that acceleration continues and we see the growth rate go to 45, 50, 60%, that increases the value of their future cash flows, which could be very significant. And those cash flow prospects are improving because operating margins are improving. You can see here the gross margin has been pretty consistent, right around 80%. But those operating margins are now in the teens and only moving higher. The company only moved to a positive operating margin about 2 years ago. So since then, those operating margins have consistently improved, and that will likely continue in the future as they get more leverage on the investment that they made in not only sales and marketing, but also all of the technology that they built over the past couple of decades. And the number of customers continues to grow as well. Here is total commercial customers in gray and total US commercial customers, which is a majority of their commercial customers, in blue. You can see the one challenge here is that growth rate of customers is not as exponential as revenue growth has been. That's because the performance obligation per customer continues to go up. That's partially because of long-term contracts that the company is signing with those commercial customers, thereby increasing the revenue per customer. So again, if Palantir can continue to ingrain itself in more and more customers, not only on the government side, which is really where they started their business, but also on the commercial side, which has been the majority of the growth over the past couple of years, this could be a phenomenal operating business. But investors need to think not only about the operations, but what they're paying for a company. And this is where things get a little bit more challenging for Palantir. The current price to sales multiple is 108. The price to earnings multiple is 526. These are multiples that you typically see in bubble situations, and it could take decades for companies to live up to these kind of multiples. You might remember Microsoft was one of the most valuable companies in the world in the late 1990s. Their stock didn't go anywhere for 15 years because it took that long to grow into the very high multiple that they had in the late 90s. Now, the stock has done extremely well since then, but it was basically a lost decade and a half for Microsoft investors. Cloudflare was one of the most popular stocks in 2020 and 2021. Their price to sales multiple got over 100, and that was when revenue was growing at over 100%. But then shares fell over 80%, and it's taken since that period of time for shares to come back. Still very, very expensive, with a price to sales multiple of about 36 right now. But they have grown over the past 4 or 5 years to grow into that valuation much more than they had in 2021. And the cautionary tale we should all keep in mind is Cisco. This is a company that has grown tremendously over the past 2.5 decades, but the valuation of the company has gone absolutely nowhere because that valuation number, the price to sales multiple, the price to earnings multiple, is something the company had to live up to. So are shares of Palantir underrated or overrated? I think today they are extremely overrated. And that's because the valuation of the company is implying massive growth over the next few decades. And anything that undermines that thesis could absolutely crater the stock. We could go through something on a macro basis. There could be a recession that forces companies and governments to cut back. That could decelerate Palantir's revenue growth. Could still be a growth company, but if it's not growing at 35, 40% and it's growing more at 15, 20%, then it doesn't deserve the same multiple that we have today. You could see more competition coming into the market. And the AI bubble overall could burst. These are all risks for stocks like Palantir that are trading at these kinds of multiples. So I think shares are very overrated, and investors who are buying in today could be getting in at the peak of the market, like investors were in 1999 and 2000s with phenomenal companies like Microsoft and Cisco, just paying simply too high of a price, or even like a more recent example like Cloudflare. 2021, this was a phenomenal company. It has been since then, but paying that high price in 2021 came back to bite investors who had to wait 4 years to even get close to breaking even with their money. Same thing could be the case for Palantir. But let us know what you think about Palantir stock in the comments section below. Your comments make us all smarter. And don't forget to check out fool.com/invest for the top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.